Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now in today's video, we're going to be taking a look at a small cap penny stock. It's based in Canada, but they actually operate in China, and they're involved with the lending and financing for small and medium enterprise companies based in Asia. Now this is one that's been requested a lot on the channel, and the company name is actually Peak Fintech, which trades under the ticker symbol PKK. Now, if you haven't already, please take a second to like the video. It really does help out the channel, and it helps get this content to other people who might find interest or value like yourself. If you're not already subscribed, feel free to do so as well, and leave a comment in the section below on what you think of Peak Fintech and this analysis video. Now, without further ado, let's play the intro clip and get into today's video. Okay guys, so that's right. Today we're going to be talking about Peak Fintech Group, PKK, on the Canadian exchange. It also trades on the US under PKKFF ticker symbol. Now this is one that multiple subscribers have actually asked me about, and I've also had some close friends refer me to this company. They did so a few months ago, so I honestly wish I had listened to that and looked into this company in a little bit more detail at that point in time. But obviously hindsight is 2020 and no time better than the present. So we're going to do it right now. You can see Peak had a very strong day on Tuesday here. So this is at time of close on April 13th. It was up 13 cents or just about 5% a share. Now if we zoom out to a 6-month chart here, you can see that Peak has run up all the way from the 40-cent range in October of 2020 to $3 at this point in time. So just about a 6 to 7x in the last few months alone. This company has signed a number of massive deals for the organization in the last couple of months. We're going to talk about that here in more detail. They also have earnings for Q4 coming up on April 22nd. So I think it's very good timing to talk about this company's business model, how they generate revenue, some of these big agreements and contracts they have in place going into year-end earnings here. Now in a nutshell, and as the name implies, Peak is involved in the fintech space. They have a number of different platforms and applications that are meant to streamline the commercial lending and borrowing ecosystem in China. And we're going to talk about each of these different divisions. There is a lot to unpack with this company. So in the interest of time, we're going to talk about the ones that are really contributing to revenue at this point in time. Now, one thing I wanted to call out here, you can see on Yahoo, they use a market cap of $280 million. This one is slightly outdated. So if we look over here at Stockhouse, you can see that they're showing a market cap of just under 300 million with total shares outstanding of 125 million shares. And on Bloomberg, you can see the exact same figure here. So 124 or 125 million shares outstanding, but they show a market cap of $375 million Canadian. Now this is important because later in this video, we're going to talk about one of the research analyst reports, and we're going to look at the way they project this company's earnings per share and market cap share price over the next couple of years. So I wanted to make sure we're all talking the same language here. So if you do the math and you actually divide the market cap by the current share price, it's going to work out to around 125 million shares outstanding. So we're going to be using this market cap of 375 million Canadian going forward in this video. So if we now jump over to the Peak Fintech website itself, this is a good little summary of what the company does. So their goal is to change the way Chinese financial institutions lend to SMEs. SMEs are small to medium enterprises. So they've really decided to focus on that portion of the market because traditionally lending to these small and medium-sized companies is a lot more difficult to facilitate. It's riskier for the banks and lenders involved, and for the companies receiving the funding, a lot of times it's a nightmare to try and navigate and understand if they're getting a good deal or not and being treated fairly. So Peak has seen an opportunity here in China to step in and really try and streamline this entire operation from both parties or both sides of the equation. And that's exactly what they talk about here. So they've seized an opportunity. They're focused on reducing risk and building relationships that are sustainable for both the lender and the borrower. Now I'll quickly read through this for you guys. Lending to small and micro businesses has long been a scary proposition for banks and other lending institutions in China. But Peak Fintech Group is changing that by using AI and analytics to help any lender virtually eliminate the risks associated with lending to small and micro businesses. Through its Tubular Lending Hub ecosystem, Peak Fintech Group automates the process by which lenders find and qualify borrowers across several market verticals. These services allow banks and lenders to safely increase loan volumes, contributing to the efficiency of China's commercial lending industry. So what's cool here is Peak Fintech has identified an opportunity or a problem in the Chinese market. They've then built out platforms and software that utilize artificial intelligence and analytics to make data-driven decisions for these lenders and allow them to give financing to these small companies, which ultimately is a win-win for both sides. Now, how they make money is they take a small percentage of each one of these loans, and that's their commission or their kickback for facilitating this transaction. Now, as you can imagine, in a business model like this, obviously volume is king, and the more transactions and loans that this company oversees, the better their overall business health will be. And that's why we're going to talk about some of these big agreements that they've signed recently that's really expanded their ecosystem and network in China in a material way. So if you scroll down here, you can see the three different groups that this company really focuses on. So number one is the lenders themselves. They then work with a group of brokers to actually bring them customers and clients. And then obviously the borrowers or the end recipients of the loans as well. Now at the start of the video, I said there's 6 different groups or subsidiaries of Peak Fintech Group. And this is them laid out on one slide. We will talk about what each one of these pieces does in a little bit more digestible format in a second here. But I did want to share you this slide because it is off the company presentation itself. So as you can see, most of them are branded under this Asia Synergy title, and then they break out the division underneath. So Asia Synergy Financial Capital, Data Solutions, Supply Chain Technology, Information Technology, Credit Solutions, and then the 6th one is this GIN division. I'm not going to try and pronounce the full name, but this one really focuses on loan brokerage companies, broker affiliated sales reps, independent sales reps, banks, and lending companies. And you'll see in a second here, the majority of this company's revenue, actually over 90%, actually comes from this GIN division, the Data Solutions division, and the Supply Chain division. So these 3 here are the big 3 in terms of revenue at this point in time for the company. So this one, GIN, really focuses on the loan and the broker side of things. As mentioned, the Data Solutions really focuses on the artificial intelligence and the lending risk analysis. And then the supply chain focuses on the product providers, outsourcing, banks, and lending once again. And as mentioned, I will break this down in a little bit more easy to understand language in a second here. Now, the other divisions are important, but they really don't contribute a lot to the company at this point in time in terms of revenue, under 6% combined. So we're not going to spend a lot of time on those at this point in time. I probably will put another video out after Q4 earnings, and we can talk about some of these other components of the company at that point. So this slide, I feel, is a lot more easy to understand than the previous one. So the company has actually worked over the past 3 years to build these 6 different divisions. So you can see it's broken down by year, and it shows you which division was started or created in that year. So the first one was actually in 2016, and this was the Information Technology subsidiary. Next up was the Data Solutions, and they have an abbreviation for all of these, ASDS, so Asia Synergy Data Solutions. This is the one that really does contribute a lot to that top line revenue. They then brought in the financial capital portion in 2018. Credit Solutions also came in 2018. And then in 2019, they launched the supply chain side and the GIN Technology subsidiary. And that was actually through an acquisition of a loan brokerage platform that already existed in China. Now, this chart here really breaks down what each one of these subsidiaries or divisions actually does. So on the left, you can see the abbreviated name for the division. They then show the platform that that subsidiary operates on, and then the service offering or what the product actually is meant to do. So again, we're going to focus on the big 3 here. So the Data Solutions, they operate on the Tubular platform, which we're going to look at in a second here. And really what they do is provide lending risk analysis that matches borrowers and lenders by using analytics and artificial intelligence. So this is really the company's bread and butter here. And you can see under the revenue model breakdown, this is how they actually earn money. So this is where that fee of up to 2.5% comes into play. Next up, up is the supply chain subsidiary. This also operates on the Tubular platform, provides supply chain related services and financing to the businesses, lenders, and suppliers of China's supply chain industry. Now, in terms of revenue generation here, they actually take a percentage or a cut of the transaction value from the lender, and they also generate money from creating these credit reports. And then third is the Jin division. They're a loan brokerage platform that allows sales reps and brokers, so this is where they deal with the brokers, to submit leads, have them matched, and earn commissions and provide qualified leads to lenders. Now for revenue generation here, they use membership and service fees, which are charged to the loan sales reps. They also use service center fees, which are charged to the loan brokers, and service fees, which are charged to the lenders. Now you can see for the data solutions, they're 100% ownership. For the supply chain, they're 51% ownership. And for the Jin platform, they're 70% ownership. So that is important and something to keep in mind as we move through the presentation. Now I should mention while we're on this slide, both the financial capital and the supply chain division are part of joint ventures with pre-existing Chinese companies. And in both situations, Peak Fintech does have controlling ownership of the joint venture, with the other companies owning 49% each. And you can see that down here in the chart for both the financial capital and the supply chain. Peak Fintech has 51% ownership in both situations. Now we've talked about most of the information on this slide. One notable thing here, the company was actually rebranded in November 2020, so fairly recently, from Peak Positioning Technologies to Peak Fintech Group. So I think that was a smart move to get that fintech keyword or buzzword into their name and really associate this company with that industry rather than just Peak Positioning, which is kind of vague. The other thing that's interesting on this slide is it actually shows based on Q3 revenue, so the most recent 2020 report, where their revenue generation came from. And this is why we're just talking about those three components in this video, because they actually represented 94% of revenue. The credit solutions and financial capital represented 6%. And at this point in time, the information technology isn't really generating any sizable revenue for the company. So now that we understand what this company does and the 6 different divisions that make up Peak Fintech, I wanted to take a second and talk about this Tubular Lending Hub platform, because this is the platform that the primary revenue generating units are built on and actually harness. So this Tubular platform or Tubular Lending Hub is really about using technology and AI to alleviate or reduce risk. An analytics and AI software platform, Tubular Lending Hub is at the core of a commercial lending ecosystem that brings together small medium enterprises, lenders, brokers, data providers, and automated risk management capabilities for the purpose of making commercial lending more efficient and, as a result, all the more profitable. Small medium enterprises are now handed opportunities from lenders they otherwise could not access. Lending and risk control operations are now increased, and it's faster for all parties involved. From finding qualified clients to submitting leads or marketing financial products, the platform does it all using a unique and intuitive process. So this software is really at the center or the heart of this company. And essentially what it does is take the questions, the risk, and the confusion out of the equation for both sides of the transaction, being the lender and the borrower. And what's great about any of these AI platforms is they actually become more efficient and more reliable as volume of data increases. So that's why it's so important for these companies to get that first mover advantage and onboard as many different lenders and borrowers as possible, because it really refines the model and it helps them make more accurate decisions and specific recommendations moving forward. So this is how the Tubular lending ecosystem actually works. So on the right here, you can see some of the value adds that this system provides. So fraud prevention, AI and analytics, case processing, application processing, post-loan credit monitoring, and client acquisition. So there's a number of different value adds that this software enables the company to provide. And on the left here, it breaks it down for each person involved in the process. So for lenders, they would register on the platform, they would enter their lending criteria, and the platform would then match them to small and medium enterprises that match that specific criteria that they've entered. It then instantly qualifies them, which saves the lenders time and money. So this is great great. Lenders can go in, they can put in the amount of money that they're willing to lend out. They can fill out a number of other fields, and they don't have to search around for qualified investment opportunities. The platform will do that for them. Now, on the flip side, for the businesses themselves, so the SMEs, they would register on the platform as well. They give access to their business data, and they will receive pre-qualified credit offers from a variety of different lenders. So they can actually choose which loan fits their business best and the terms of that loan that's going to work for that company. The other thing that's great here is they actually have API plugins, so they can pull business data from a variety of different platforms, and we're going to see that in a second here. So it really streamlines the process for them as well. Brokers are then also involved here, and what they do in this ecosystem is they would actually bring leads to the platform. The platform will qualify them. They'll instantly match them with a variety of lenders, and then they're paid a referral fee on each loan for generating that lead. And then finally, the actual data providers. So similar to Equifax here in Canada, but this is where the data actually comes from on the platform, and they offer this as a pay-as-you-go model. So as the lenders and the SMEs need to access data, they can do that for them, and they're actually charged a fee to facilitate that data dump. So this slide shows a high-level summary of just the number of people involved in this ecosystem. So at this point in time, they have 50 different financial institutions. They have 53,000 brokers bringing them leads. They've got 24,000 registered small medium enterprises, and this number's grown considerably. Keep in mind, this is from June 30th of 2020. So all of these big agreements and partnerships we're going to talk about in a second here are not factored into these numbers. And overall, they've facilitated 1.3 billion yen worth of transaction value in China. So we're now going to jump into the actual numbers here. As mentioned, Q3 was the most recent quarter available. Q4 is expected on April 22nd. So I'm excited to see those numbers. But for the 3-month period ending September 30th, 2020, Peak reported revenue of 15.1 million. These are in Canadian dollars, which was double the revenue generated in Q2, which came in at 7.3. Also worth noting, the revenue is 35% higher than the consensus estimate from Analyst, which came in at 11.2 million. So it was a huge upside surprise or beat on overall revenue. Now that being said, operating expenses also doubled, so they definitely moved up in unison with revenue. And the company really identified outsourcing activity and actually setting up these outsourcing services as driving that expense increase. So 13.4 million of the total 15.1 million operating expenses was actually attributed to this outsourcing service expense. And you can see below here, they give a little bit of context, but this is primarily related to the logistical services related to material purchases by the supply chain division. So as that supply chain subsidiary ramps up, they need to obviously work out all the logistics, and that's driven a lot of that expense in Q3. Now the company does mention here that outsourcing services will be brought in-house hopefully by the end of 2021, and that should reduce the cost to about 40 to 50% of total sales, whereas right now they're paying about 89% of total sales volume for those logistics services. Now this page talks about some of the recent developments here. These are a few months old, but there's two in here that are extremely important to this company that I wanted to call out. So they've abbreviated them as BDC and BJM, which I'll use moving forward. The BDC one is an agreement they've signed with a national wholesale distributor of consumer electronics who sell laptops, smartphones, and other products on China's top 3 e-commerce websites. So this represents 60,000 online retail clients in itself who collectively sell about $50 billion worth of consumer electronics per year. So you can see these numbers are absolutely massive. So Peak's actually going to get involved with the financing of some of these purchases, and then they're going to charge that fee of 1 to 3% for helping facilitate that credit transaction. Now the other one here is the BJM. This was an agreement with a packaged food wholesale distributor, and this one has over 250,000 retail clients. So again, Peak is going to be involved with the lending to these retailers and then take a kickback on any of the credit that they've provided. So these two deals were absolutely massive, and between the two, it represents an additional 310,000 potential retail client opportunities. Now, the other deal I wanted to talk about here is from March 2nd, so this one is relatively recently, and they've actually agreed to a strategic partnership with ShopX, which is China's top e-commerce software provider. Now, ShopX actually allows merchants to manage multiple different e-commerce storefronts on multiple different marketplaces from a single application. So it's very effective and very popular for a lot of these e-commerce retailers. And it supports 28 different online marketplaces. Now, between those 28 marketplaces, they estimate there's 9 million different stores and over 80 million what they call micro shops. And you can see some major names here. So JD.com, Amazon China, and a number of other online retail or online marketplaces in Asia. And what's so interesting about this partnership is they're actually using an API link or plugin between the ShopX platform and Peak's Lending Hub. So they're going to get the business data flowing directly from these e-commerce marketplaces into the Peak software and AI model that's going to seamlessly allow them to pre-qualify these stores and micro shops for loans, credit, and financing. And the CEO specifically calls out, I can't stress enough how important this partnership is for us. This is absolutely massive for the company and a big reason the share price has been on such a run in the last couple of months. Now, to wrap things up here, you guys, I wanted to talk about two different pieces of a recent analyst report on this company. So the first is this page here that gives projected revenue and EBITDA over the next 3 years. This analyst has revenue coming in at just over $100 million in 2022 with EBITDA of about $40 million. Now, this report was put out prior to those big e-commerce announcements. They've also done a lot recently with social media influencers and people that have substantial followings and are now starting to sell products via social media. So that's definitely exciting, and those numbers aren't factored in here. But what's interesting is they actually use 3 different methods to generate share price estimates. So they use a discounted cash flow, a revenue multiple, and an EBITDA multiple. And this analyst, taking the average of these 3 calculations, comes out with a share price of $2.40. Now, this analyst is using shares outstanding of 138.7 million. And if you multiply that out by the 1-year price target of $2.40, you get a market cap of about $333 million. Now, they do have 21 million of debt as of June 21st. So keep that in mind. But this analyst feels like 1 year from now, the company should be worth about $332 million, which is actually below where the company is trading at this point in time. So I thought this was interesting because the company is already starting to surpass a lot of these analyst expectations. And we saw that with the Q3 revenue beat as well. I wanted to bring this up because I thought it was interesting how they use these different calculations to come up with this price point. And I also thought it was interesting to see the revenue projections and keep this in the back of my mind as I continue to follow this company and see how closely it matches or beats these numbers. Now, the other thing I thought was interesting in here, and keep in mind, these are slightly outdated numbers, but this analyst actually compares Peak Fintech to other small cap, mid cap, and large cap companies in the Canadian fintech space. Most notably is Shopify up top here. He then uses their different metrics, so share price, market cap, cash, enterprise value, revenue, EBITDA, to come up with these ratios. So these are very similar to what I use for analyzing the small cap MJ companies in some of my other videos. But he comes up with an enterprise value to revenue and an enterprise value to EBITDA ratio for each one of these companies. He then models that out based on 2018 actuals, 2019 estimates, and the last 12 months. And you can see Peak Fintech actually lands just about at the group's median in terms of last 12 months enterprise value to revenue with about a 5.6 times multiple. Now, at the time this chart was created, they were trading at $1.60. This is from December 3rd. So again, these numbers are outdated, but it was interesting to see all the different companies in this space, especially if you are bullish on the fintech sector overall. I thought this was a great resource to start to look at different companies, their competitors, and how they stack up for a number of different metrics compared to other operators in this space. So to close things out here, you guys, I think it's obvious that Peak Fintech is onto something here. The Chinese marketplace for lenders and borrowers alike has been very hard to navigate, and there's obviously an opportunity here where this company feels like they can make a strong impact and add tremendous value to these stakeholders. As a result, this company's share price has run up substantially over the last 6 months and even more so over the last year. If we're to look back into summer of 2020, this company was trading under 20 cents. For that reason, I'm not ready to pull the trigger on Peak Fintech yet. I want to continue to watch, see how Q4 results come out. I think this company maybe has gotten a little bit ahead of itself. However, it's hard to say at this point in time because of some of these huge agreements they've just signed and because it's in such a high growth stage of this company's development. Now, that being said, I am definitely going to put Peak Fintech on my watch list. This is one that I really like in terms of their business model. I think they're definitely onto something here, and this Tubular lending platform is very exciting to me as a potential investor. Now, for those of you that currently hold shares, I'd love to hear your thoughts on this company, whether or not you think it has run up and got a little bit ahead of itself, or if you think there's still upside from here in the next 6 to 12 months. As always, you guys, feel free to leave a comment in the section below. Let me know what you think of this analysis. If there's any other stocks in this space that you'd like me to take a look at. If you haven't, please take a second to hit the like button. It really does help drive this channel's content to other people who might find value. Feel free to subscribe to the channel. And as always, have a great rest of your day.